thanks to all the speakers, organizers who have worked tirelessly to make this webinar a success. Without your dedication and contribution, this gathering would not be possible. In closing, I wish you all a highly productive and insightful events. May you leave inspired, enriched, and ready to apply the knowledge gained in your own work. There you are, in modern China, Malaysia, Jakarta, or anywhere else across the globe. Thank you. Welcome once again to the International Market Outlook and webinar on technical analysis. Let's make a memorable and transformative event. Thank you very much.
Thank you very much, Mr. Sharul Iswan, for the inspiring speech. Yes, I think Dr. Mata has grown over the years since 2014, since we were developing member of Digital One, developed so much in past 10 years. Without further ado, I'd like to invite our beloved president of the National Technical Analysts, Mr. Whelan R. I wasn't sure where you were, what country you're in. I understand you're nearby, you're in the same time zone as we are.
I'm actually next door. I'm in Bangkok, Thailand.
All right. Okay, please give us some insight.
First of all, I'm so excited and so happy to be here together with you. And congratulations for putting out such a great event. Morning on a Sunday is not really something people always expect, like starting early on a weekend. But you make it happen, and we have such a great audience. And I'm totally excited to this work and to see all of you people. So thanks, Indra, for making it possible that everybody be part of this. I really appreciate this. Of course, we're also facing our next conference in China. So very, very great preparation and to have a first look on the market. And right now, the market is quite an interesting situation as well. Everything's ready like crazy. But the question always is really that can we expect some down moves before it really continues, or is it a fast break? So this is the edge where we are looking at right now. So I'm really excited to hear what you people think about this. And also we're very, very happy to see as if the president, where we have to say we're market technicians from around the world, so it's the same language, to see all together coming from Indonesia, Malaysia, Singapore, China, and from coming from origin, Germany, sitting right now, Bangkok, Thailand. So we're already making it happen. We speak the same language with capital analysis and we have the same on the market. And why is capital analysis important? Because there are two ideas of approaching the market. First idea is pretty easy to understand. It's the analysis. You look at numbers, you look at data. You try to interpret what people are saying or not saying. You try to how to try to make it better. But all in all, it's something really we know a lot about data. No, data is something you can play around with as well. So therefore, there's always in the in fundamental analysis. And if you go with technical analysis, on the other hand, it's easy to understand, it's easy to approach, you just need to chart. And the chart is plotted by the price. So therefore, if you're able to read the price, if you're able to see what is happening, the movement of the price, and what might happen if you see candlesticks, if you look at get an idea of what might happen next right that moment, we have definitely an edge compared to fundamental analysis, because when it comes to fundamental analysis, you might choose the right asset, but with technical analysis, you might choose the right point, right? So therefore, as an analyst, we always have the opportunity to get a very, very early entry and a very, very early exit compared to other analysts. I'm very grateful, to master this skill and to say, is I'm pretty sure to you and not to our attendees for this operation for this conference. So why are why are the member society important? Well, we already know where market technicians come around the same language, and I am the example of this because I'm traveling the world all over again. I go from country to country. I go from Europe to South America to North America. I go to Canada. I go to Asia, Southeast Asia, Japan, China. And guess what? Everywhere I go, I need market conditions. I need technical analysis. And we do that within a second. Why? Because we are alike. We are sharing the same thought. We are sharing this approach. And we always have a topic to talk about. Hey, how are you trained? How do you do your analysis? What do you think about the X, Y, Z? And something easily can get together, but easily can make friends far away from all the, the noise coming from politics, from religion. People feel like, oh, this is my team, no, that's my team, But as market division, we always are on the same page. We bring around this. So therefore, that is one of the ideas. With it. And also, that's why it's so important, because I like to be connected. We all like to be connected. As you like to be connected, so therefore, I'm very, very grateful to be together today. And also with and also with society, society, we deliver proper education. We deliver ethics. And talking about ethics, we all know about what's going on in the retail market. You go on to the social channels, you see all the ads, you see all the noise, you see all this. Well, come to my Telegram group, I send you signals, give me your money, go to that broker. Well, we follow ethics, and we give people something to look at and to get oriented, to feel like, okay, I can trust these people because they have ethics, they have a proper education, they are market professionals, they are connected technicians, and they know what's going on. So this is something I'm very, very proud of to deliver this as President of Zipsta. Of course, saying this to all technical analysts in the world. We deliver the highest standard of technical analysts, and we have a community and a worldwide collaboration. We have the best experts in the world. And with the upcoming conference starting on Friday, the 4th October, we have the opportunity to present the best experts right around the corner in Bao in Hainan, China. So if you haven't have your ticket right now, it's time to get it, because we will be all together speaking our same language, looking at the market, discussing all new techniques, and maybe refining some old ones as well. We are shaking hands, we are making friends, meeting colleagues, and enjoy ourselves as professionals, but also retail traders. And therefore, I'm really, really happy to be around the corner and to go there for not the upcoming weekend, but well, the nearest weekend from the 4th of October to 6th of October. We have 3 days, so I hope to see you there. If you you want to register, just go to ifta.org and you'll find the link to the conference to register. If you haven't done this already, now is the time to do so. And if you're in doubt, just watch this webinar, let's say mini conference we're looking at, and get an idea of what we will talk about for 3 days when we all get together in China. I really hope to see all of you there on the weekend of the 4th to 6th. Thank you so much. And now enjoy this great webinar, this great conference, this great presentation of all our experts.
Thank you, Ilan.
Thank you, Ilan. Great speech. Great speech. Very inspiring. It's so apt. The tagline for IFTA, market technicians from around the world speak the same language. You have to attend an IFTA conference to actually feel that tagline very well, because when you get together, you're the same. You talk the same language, so there's no barriers. Now, moving on, it was very apt for me to say Magadan, Maga. I don't know whether I said that correctly, but for the Filipinos out there, that means in Tagalog. So the next speaker we have, the first speaker actually, we have Mr. Jonathan Ravalas from the Philippine Society. Jonathan is currently an independent director at Peace Resorts Group Holdings. He's a seasoned financial professional who has demonstrated the ability to provide timely market commentaries and outlook on the global financial markets and macroeconomic developments in both local and foreign economies. He's got strong technical and business qualifications with impressive track record of more than 25 years of hands-on experience in foreign exchange and equity trading, financial analysis, money management, and portfolio development. Likewise, an expert in strategic change management, financial advisement, and financial literacy. He's got a proven ability to successfully analyze critical business requirements of an organization, identify deficiencies and potential opportunities, and develop innovative and cost-effective solutions, enhancing competitiveness, increasing revenue, and improving business value. Now, without further ado, we've got Mr. Jonathan Ravalas. We're actually sharing that he's recording. You can actually follow this webinar on YouTube as well. For those who actually missed some of the parts, you can actually watch it again on YouTube. Are we as well? Right. Technical glitch that got up. Yeah. Nonetheless, just like what Stephen Art shared just now, this webinar is kind of like a mini. It's like a youth that you get if you attend the conference from the 4th to the 6th of October in Hainan, China. It will be a larger scale. We've got societies from all over the world coming and speakers. This is just from Southeast Asian chapter. But if we go to China, we'll have more speakers. And
Seperti promise. Ambil dia satu. Dalam laci. Bawa laci besar tu. That's almari laci. The third. Atas. Bawah dia. Ada.
After the voice coming out.
so, on to the speaker now. I understand that they can hear the sound on YouTube, but we can hear it on in Zoom platform. So shall we switch on to the next speaker?
Yes, I think so. Maybe after this one fix it, then we going to this video again.
All right. So just now we'll go on to the next speaker, which is Mr. Nicholas Tan. Mr. Nicholas Tan from Nicholas, are you ready to go on?
Yes, I'm ready.
All right, okay, I'll just give you a short introduction about you. All right. Mr. Nicholas Tan from the Technical Analyst. He's the president of the society. He has over 30 years experience in the financial market, starting as a first with Singapore banks in 1989. He's vice president refining technical analysis skills, the fast-paced foreign exchange market. Since 2002, he's been trading record with the UOB Asian, and he started his experience with teaching roles, including the diploma in wealth management at RC Institute of Technical Analysis courses at self-interest. As an accomplished author, Nicholas wrote Handbook for Forex Trading, Handbook for CFD Trading, before becoming a top 10 non-fiction bestseller in 2007. He has also made TV appearances on programs like Money Laundering and has been a sought-after speaker for various societies and organizations. Nicholas holds a bachelor's degree in business administration from the National University of Singapore, chartered market technician designation, and he is a certified financial technician, the International Federation of Technical Analysts. Without further ado, Nicholas, I hand the platform to you.
Thank you very much. Good morning to all of you. Today I'm going to share using a Western technique together with a web technique. Instead of using point and finger chart, I'm going to use rainbow chart. But using the same technique used for point and finger indicators on the rainbow. Okay, so let's get started. Before I go on, just a little disclaimer. This is not an investment advice, and all investment products carry risk. So please professional advice if you are trading. This is for educational purposes. Just a short introduction before I go on to rainbow chart. So this is the outline. You will get to learn what is the rainbow chart for those of you who are not familiar with rainbow chart. I will also show you how to use rainbow chart. And when using a technique, it is always important to know the strength as well as the weaknesses of the technique. If you know the strength, you can make use of the strength to enhance the weakness. If you know the weakness, you know how to cover up the weakness. And in this way, or in a way, we are going to add Western technical indicators based on the technique to the rainbow chart. And the last part of it will be Q&A. So I will have a 30-minute presentation. I have a lot of slides, so I may have to go a bit fast. And 15-minute Q&A, you type in the questions that you have in the room chat. We'll try to answer as many as I can. Okay, coming to the rainbow chart. Rainbow is a Japanese type of chart. There are many types of Japanese chart. One of it is the kaki. You have a 3-line break. Rainbow is one of them. And rainbow is very, very similar to the point and finger chart. In a way, it is a measurement of price movement, reflection of price movement. It does not take time into consideration. It only makes use of price movement. So, in a way, when users notice in the price movement, you only see you only see price movement that is filtered by a certain formula. There's also a weakness without time. There is no daily volume involved or volume involved with this indicator. So in a way, you're not able to use volume or confirmation. The price movement by the rainbow chart is represented by the bricks. Okay, so in Japanese we call it a chart. So every brick is a predefined amount. So this is a rainbow chart. I'm using EMD as an example. This is a rainbow chart. You see there are rectangular boxes along the chart. Rectangular boxes, the red color of the brick. If it's coming down, it is red color. If it's going up, it is green color. So this is very similar to your Japanese candlestick technique. If it's going up, it is green. If it's coming down, it is in red color. This is the brick. There are two ways to define the brick's size. Okay, in this case here, I'm using the traditional rainbow chart technique. Every brick is US $2. Okay, so every brick is US $2. There's another way in which you can use to define the size of the brick. The bricks is very important. Later I'll explain to you. The second way to define the bricks is actually to use the average true range. You can use a 20-day or 21-day average true range. You will plot. The weakness of an average true range, although it reflects the movement very well, it doesn't have a nice number, integer number. be it can be $2.20, it can be $2.10, but it is not a round number. So there are two ways you can define the size of a brick. By using the traditional, you can define amount. You can put in $2 into one. You can use ATR. ATR is defined by the computer or by your charting platform. I'm using investing.com. So if you go to investing.com, you just choose the parameter or you choose the setting. You can choose traditional. By default, it goes to ATR, the average true range. Every bricks is $2. When it is going up, it is very similar to the point and figure. Every $2, you will add one brick to the up movement, to the rally. But when it comes to a reversal, the reversal, you will need to have a $4 reversal in order to complete the first reversal brick. Let's take a look at it. If this is $182, if price $182 out there, 180, it must go to 180 to form to the base of the green brick. And if it's going to 180, then you have a brick that is updated. So similar to the point and figure, it has a unique filter, a two-structure price filter. When it's going up, one brick will continue the rally, but if there's a reversal, it will be twice the amount that is required. Okay, this is a brick. This is what I'm talking about just now. If this is $152, this is the closing price of the brick. Again, you'll see dates on the bottom of the chart, but these are not the actual date. The dates here are only for reference only. So on this day, the price closing is 152. This is the last update of the brick. Every brick is $2. If it's going up, if it closes at 154, you will have a new green brick that will be updated to 154. Now my question is, if price goes up higher to 155.90, will there be an update on the chart? Using Renko, the price is fixed. Every $2 you will update. If it goes up only by $1.90, there will be no update. Okay, so no new bricks will be added. The price goes to 155.9. For a reversal at the current closing price of 152, what do you think the price will have to drop to in order for the update, for the first red brick to be updated? Okay, you can type into the chat box. Okay, the answer is from 152, it is to go to 150, which is the bottom of the green brick. You will have to move $2 down in order for price or for the red bricks to be formed. So from 152, price must drop to 148 in order for one green brick to be formed. This is the structure of Renko chart. This is how it works. Renko chart has no time frame. So the time frame is actually determined by the box size of the Renko chart. So if you determine $2, this will be what it looks like on the top chart. Okay, if you have a $2 box value, this will be what it looks like on the Renko chart. If you change it to $1 using the same daily closing, this is how it will look like on the Renko chart. If you reduce the box size, you will show more details. If you increase the box size, it will reduce the detail. One question that most people will ask is, how do I determine the box size? What should be the value of the box size? a guide would be to use roughly about 1% of the share price. Share price like AMD move very fast. You can go from 100 to 152. So roughly about 1%. In this case here, $2 is about 2% of the price move if it's $100. If it's 152, roughly is about 1.5%. So on this chart here, you can see two values. Later, I'll explain to you what are these two values. For now, let's take a look back at the Renko chart, the box size. I recap again. The time frame, there's no time frame for Renko chart. You will need to use the box size to determine the time frame. If you use a $2 box, there will be less detail. If you use a $1 box using the same daily update, you will get more detail. Okay, so this is the difference. Renko chart using the same value. Okay, using the same value. This is a Renko chart, traditional $2 per box. This is the daily chart using the candlestick. You will find that it is quite similar. Okay, the price movement on the daily chart is very similar to the price movement of the candlestick chart. The low, if you see August, there's a low here, there's a movement up, there's a correction lower, it is here. If you see the top there, this is where the top is. So in a way, it follows the daily candlestick chart quite closely. The only difference is it can be compressed because if there's no $2 movement in a single day, you will not be updated. So if there's more than $2 movement, you will be updated. Okay, so you can compare the daily chart on the Renko as well as the candlestick. You have an idea how price moves. This is what I'm trying to tell you. Renko chart do not show you sideways movement that much. If there's not movement of $2, you will not be updated. Okay, so you can actually use a 15-minute chart. Okay, a 15-minute update chart, and you can get lesser detail, but very clear trend movement along the way. Later, I'll explain to you the difference between these two, whether you use Renko chart and whether you use the daily candlestick chart. What is the difference? Okay, so you can see the strength and the weakness. The strength of the Renko chart, it helps to reduce. Okay, it helps to reduce noise in the market. It gives you very clear support and resistance. You can see from here the support. Okay, the resistance at the top here, you have a very clear resistance. This support and resistance can also be used to in a very similar way to your Western chart technique, support and resistance. There's also chart patterns of this Renko chart that you can make use of as well. It shows the trend very clearly. Okay, you can see from here, price movement. If it's coming down, this stretch here, it comes down in a very clear, nice movement. And at this moment, or this stretch here, this is what you see. Okay, and this is also the price movement. Okay, the rally up from here. You can see the price movement along the way. Renko chart do have a weakness. It does not show you the actual price high and the price low. Just now I was referring to this price here. If you remember, there's a difference between the price and the closing price. Okay, so let's go to this chart here. The last closing price of this Renko chart is actually 154. But the current closing price is actually 153.24. So previously, there was an update on 154. The current day, the update is the current closing price is 153. It is not moving higher above 154, so there's no update of by $2. There's also no reversal. So 153 for the current day, there's actually no update. So your Renko chart do not show you the actual high and the actual low. If you go back to the chart again, this actual high is also not reflected at this price point here. The actual low may also be lower than the price low shown on the Renko chart. So if you are using Renko chart, you need to find out what is the actual high and what is the actual low if you are interested in the actual high and low. Okay, but if you are just trading the swing movement, okay, just follow the Renko chart. There's no volume. Okay, Renko chart has no time associated, so there's no volume. You can actually use volume and price, but there's no daily volume. Or if you are using intraday chart, there's no hourly volume information. So you will not be able to use volume as a confirmation for point and figure, or Renko chart. It doesn't give you extreme condition. Okay, this is your Renko chart. It doesn't tell you at the low whether the market is in an oversold situation. If it's going up before it turns down, it doesn't give you information about whether the market is overbought. So these are the strengths and the weaknesses of the Renko chart. For the Renko chart, we know about the weakness. We can also use indicators to find out about the Renko chart. Before I go on, just now I wanted to tell you about the update on the point and figure, on the Renko chart. The time period here is a 15-minute chart. If you use a 15-minute chart, if you use a box size of $2, every 15 minutes, the chart will check if there's a movement above $2, in this case here 154. Every 15 minutes, there will be a check. If there's more than $2, let's say 156 at the close of the 15-minute chart or time frame, there will be an update. But if there's no $2 upward movement, there will be no update. Similarly, on the 15-minute or at the 15-minute interval, if there's a reversal of $4, 150, if you go down to 150, there will be a risk that will be formed. The difference between a 15-minute and a daily. The daily time period only updates once a day at the closing of the day. If you are using intraday, like 15-minute update, every 15 minutes there will be an update. So if you use a shorter time period, there will be more update. Okay, there will be more update, so it will look a little bit different from the daily chart. Okay, so I'm going to show you chart patterns. Okay, support and resistance first. This is a resistance which is shown very, very clearly. So when using Renko chart, you have very clear resistance point. You know where is a resistance. If you want to sell, turning point. If it cannot go up, if it comes down, turning point, you can look to trade on the turning point on the resistance. Support itself is also very, very clear. You have a clear support. This support and resistance, they also form chart patterns that you can use. Okay, this is very common in the Renko chart. You have the W and the M pattern. This is the M pattern. This is a W pattern. If you're trading on the chart pattern, you can also use a breakout. If it breaks below the low of the chart pattern, the M pattern, you can look to sell. In this case here, on the support side, if it moves above the resistance, okay, then you can look to buy. This is another way that you can trade using the Renko chart. Okay, support, M pattern. Okay, this is the W pattern for the support. For the resistance, you have the M pattern. For the support, you have the W pattern. Very similar to your double top, double bottom that you can use for Renko chart as well. The trend itself in Renko chart, it is very clear. So by simply using the Renko chart, you can pick support and resistance. You can also trade the trend movement as well. Earlier on, we talked about the Renko chart. The Renko chart do not have oversold market extreme, overbought, oversold. Later I'll show you. This one I talked about it earlier on already. 154, the actual closing price is 152. So actually, when you look at it, for 2 days, there have been no update of this chart here. Okay, so this 154 is the closing price of the brick. This 152.96 is actually the actual closing price. Okay, sorry, this is a 15-minute chart. So on the 15-minute, this is a 154. This is the closing. The last closing is a 15-minute. There's no update. Okay, so you need to have 156 to add a green brick. You need to move down to 150 to add a red brick. So in the meantime, if it doesn't go above 156 or go below 150, there will be no update. Okay. Oversold condition, the Renko chart do not give you oversold condition, but luckily we do have technical indicators that can be plotted using the closing price of the brick. In point and figure chart, the closing price is based on the column mid price, but for Renko chart, we use the closing price of the latest brick. In a way, it captures the trend much faster than the point and figure chart itself. But using the same technique that we use for point and figure chart, by using the closing price, we can actually use technical indicators to enhance our Renko chart. Okay, so indicators are calculated as per normal using the closing price of the brick. Do take note, there may be a few days, there may be a few time period, 15 minutes, if you are using 15 minutes, there may be a few time period where there will be no update because in Renko chart, it must move by a predefined movement in order to have an update. So the closing price may not be updated if there is no predefined movement. Okay, so the parameters tends to be shorter because there could be no updates. If you use a 20-period closing 20-day closing price, there could be no update. It could take 30 to 40 days for an update. So for indicators, the parameter tends to be shorter. So usually I will use a moving average of 5 days. Okay, 5 days closing price for the moving average. Okay. So any indicators, any technical indicators that use closing price can be used on the Renko chart. And if you look at Renko charts give you very clear, well-defined support resistance. It shows you the trend very closely. Unfortunately, it doesn't show you momentum. So momentum, overbought, oversold, extreme value, your momentum indicators will work very, very well with the Renko chart. So I've given you some examples here on the Renko chart. Okay, so this is using an RSI of 5, RSI 5 period based on the closing price of 154. You can calculate the indicator value. Okay, so divergence at price high and price low. In this case here, you can see this is the price high. You actually have divergence. Okay, I normally do not use momentum indicators. The extreme value, if it's overbought, I look to sell. If it's oversold, I look to buy. Normally, I don't use that. I prefer to use divergence. Okay, so if you look at double top here, there is actually a divergence. So it confirms the top in place, and it also indicates that price may be coming down. So as you know, I'm a Singaporean. Singaporean tends to be a bit kiasu. Okay, kiasu means afraid to lose. So Singaporean like double confirmation. So in a way, this acts as my double confirmation for the Renko chart. When you see a chart pattern, a resistance high, together with a divergence on the indicator, okay, you can look to short, or you can look to sell your long position, or you can look to go short. On the downside, you can see there are triple divergence along the way. These two are very, very obvious. Okay, this point here, there's a divergence. I'm also looking at the divergence here. Okay, there's two divergence here. You can actually look to trade the divergence, again, opposite of this. This one, there's a divergence, small rally. This one, there's a divergence, a bigger rally. And now, okay, currently in the early September here, we actually do have a divergence. The first price low, this is where the RSI indicator low is. We have a lower low, but price or the indicator RSI, price hit a lower low. The indicator do not have a lower low. Instead, it has a higher low. This is also a divergence. It means that price is moving higher. Okay, since early September, price has been moving higher. It will probably move higher because there's still no reversal as yet. So this is how you can make use of the RSI in combination with the Renko chart to give you a better signal in your trading strategy. Okay, beside RSI is a momentum indicator. So you can actually use RSI. You can also use MACD. Okay, I do not have any example on the MACD. I only have RSI example. I also have a moving average example only. It doesn't mean that these are the only two indicators that you can use with the Renko chart. You can use many other indicators. This is investing.com. If you go to investing.com, you can try out the various indicators that are available. Okay, all of us has a preference for a single indicator. For me, okay, I like the RSI, I like the MACD. For you, you may like stochastic. Stochastic can also be used. You can try it out, but do remember, try to shorten the parameter, because one of the characteristics of Renko chart is there could be no update. The price do not meet a predefined amount. And because it reduces noise, okay, small price movement is usually not updated. Only a predefined amount movement is updated. So using a smaller parameter value is more helpful. Okay, if you use a longer parameter value, the signal can be delayed. Okay. So this is using our moving average. You can see the moving average. Usually when price crossover, it is very timely. It may not get you in at the highest point, but at this point, it gets you in to the reversal value, gets you into the reversal value trend straight away, earlier than the M pattern or the double top pattern, or the reversal pattern on the Renko chart as well. So this is one way you can use the trend filter. Also take note, moving average don't work well when the market is non-trending. So in this way here, you can see when the trend is trying to find a bottom, trying to reverse, your moving average will tend to give you false signal. You can cut down on this false signal by using a double moving average. Okay, so in this case here, I use a 5 and 11 moving average. It cuts down on the error. Okay, in this case here, it cuts down on some of the error, but it does not cut down on all the error that is provided by the moving average. Okay, so again, a dual moving average gets you in or reduces the whipsaw in the trend, but it tends to get you into the market at not so good price. Okay, you have to pay some price lag. Okay, so if you want timeliness, you may want to use patterns, okay, together with a single moving average, or if you want a more steady signal, you would want to use a double moving average. Okay, so this is how a moving average can be applied to the Renko chart. This is combining the two of them together. Okay, if you combine two of them together, you have divergence, you have a sell signal on your moving average that could enhance the accuracy of the trade signal. So in a way, very simple indicators, okay, moving average plus RSI, you actually get very early, very good timely signal along the way. When it's going up, again, the same thing, you have a divergence along the way, you have moving average crossover. So when it actually reverse, it could be the time for you to buy. So it gets you into the trend very early. Okay, so you can capture the trend. Okay, so I've shown you how you can make use of the Renko chart. I've shown you how you can use Renko chart to trade just with the Renko chart characteristics. Okay, you can add indicator to the Renko chart. I'm also going to show you a simple trading strategy for swing trading using the Renko chart. Okay, it is one of the two indicators used, is what I've shown you earlier on in the slide. I'm going to use a double moving average to confirm the trend, and the RSI, the divergence, to pick the reversal. Okay, so I'm trying to find market bottom. I'm looking to buy. If I buy, when the market goes up to the high, I'm looking to sell. Divergence is one way for me to pick the bottom and also to pick the top. Then the moving average is used as a confirmation. Okay, there are many variations to this strategy. It is very simple. Moving average, I'm sure every one of you know how to use the moving average. RSI divergence, I'm sure you know how to pick up RSI divergence. Not just RSI, you can use divergence in MACD as well as stochastic to trade. Okay, so the variation to this strategy you can add using stochastic, other technical indicators. Also, this strategy can be used for short-term trading. If you want to use it for short-term trading, change the parameter, one box size, $1 box size, and you can update it more often, okay, by using a 15-minute or 30-minute update. Normally, if I trade shorter term, I will use a 30 minutes. I use it on the US market because, the US market, they open at 9:30, they close at 4. If you use an hourly chart, it may not be there could be an opening misinformation along the way. Okay, so normally I'll use a 15-minute chart or 30-minute chart for update. My box size is $1 if I'm trading shares that are closer to $100. Shares that are $50, normally I'll use 50 cents, US 50 cents or US $1. Okay, so you can also use it for long term. You use a $2 on a daily basis. Normally, it can if you capture a nice trend, it can last you 6 to 9 months, even up to a year. Okay, so this is the trading strategy using a dual moving average together with RSI chart. Okay, so you can see here there's a crossover, but there's actually no divergence along the way. This is the first divergence that you will see. Okay, the first divergence didn't work out. The second divergence, okay, price works out very, very nice. Okay, you have an upward movement. Again, you can see from here, whenever price or when price hit the higher high, you have a lower low in the RSI indicator, hinting that price may have hit And then at the top here, there are divergence. There are three effects. Okay, so again, it tells you that price has turned down. In this case here, unfortunately, the Dow Jones, there is no divergence along the way. Price turns up. Okay, so you can see that the Renko chart can also be used on your index as well. If you are trading the index, I use 100 points per box. Okay, I use 100 points per box. So you can use it to trade. Okay, so this is where the divergence is. This is based on the Nasdaq. Again, the same thing. Okay, divergence you can use, and also trend signal. And then if you are looking at the index, okay, this is 41,000. This is current update, the latest update. You see that it is pink color. Okay, pink color is the latest closing price. If it's not red bricks, if it's not red in color, it means that there's no reversal. Okay, so this is standard. This is actually the latest price. Okay, this is the latest price. If you are using trading view, if you are using a paid version, you can even have Renko chart that shadows above and shadows below. Okay, so there's an update. You will see the actual price high. Okay. So back to our Nasdaq. This is this is Nvidia. Back to our Nasdaq Composite Index. This is where price is moving. This is latest price, but there's still no update. Okay. So if you look at the price on Friday opening, the Dow Jones is already 42,000. I'm not very sure whether it goes up or goes down last night. Okay. So again, the trend shows that it is likely to continue higher. There's no divergence. It may be overbought, but the trend is still strong and still go higher. Okay. So for stocks, this is Nvidia. This is based on the same dual moving average and also the same RSI indicator. Okay, you can see divergent signals to tell you price could be approaching a possible price low. It could be a time for you to get into the market. Whenever there's a moving average crossover, you can look to buy. Okay, so it gets you into the market timely. This is on Micron. Okay, the double bottom is forming. This is early September. This is earlier September. The price is 88. I think last night you reached $90 already. Okay, so a possible divergence could be forming after a decline from 150 to this level here. Okay, you can actually use Fibonacci as well. If you draw a Fibonacci from the low to the high, this is probably around 38 to 50%. Okay, so again, price is hitting a support. If it doesn't go to $86, if there's a divergence forming, there could be a possible reversal along the way. Okay, so you watch out for this. Okay, another example on how you can make use of two moving average and also the RSI. I've tried to show you some of those charts. Okay, in this case here, this is the Dow Jones Dow Jones Industrial Index. Okay, I've used 30 minutes. I've tried to update it more often because it is more volatile. This is also the same, the Nvidia. I've tried to use the Nvidia, the 30 minutes on the $2 price chart, because Nvidia tends to be a bit more volatile. It can move $2 or more in a single day, or in fact $2 or more within a 30-minute time frame. This is Micron. Micron has been on an uptrend, so I'm trying to show this trending stock. Okay, so this trending stock has gone up, has come down. You can see that this strategy of using the two moving averages as well as RSI indicator is also very helpful. Only in these instances when price is moving in a sideways movement, okay, both the indicator, the moving average, as well as so the RSI doesn't work very well. Okay, so again, the same thing. Whenever price is in a sideways movement, it doesn't work well. So again, do remember this is not a holy grail. This is a tool to help you in your decision making. Okay, Palantir on a steady uptrend, you can see that the uptrend is also captured by both the moving average, okay, as well as divergence in your RSI indicator. But in this case here, for Palantir, the trend tend to be shorter term in nature, okay, compared to earlier Nvidia, the trend can be longer term in nature. This trend tends to be shorter term in nature. Okay, the shorter term in nature, do take note, this is somewhere in, or this is in June, okay, it turns around in August, so could be about 2 months trend movement. In this case here, there's no sell signal. It is from July up to now, it is still moving higher, the trend is still the same. Okay, Alibaba. For Alibaba, the price movement has been consolidating between the low and the price peak. You can see that in 2024, this is the price movement in 2024. There are not a lot of price movement. So in a way, when using the Renko chart, it helps you to filter away the noise and the sideways movement. Okay, sideways movement, we know when using the moving average, the sideways movement does not work well with a moving average. It also don't really work very well with a RSI indicator as well. So in this case here, we managed to filter out the noise, okay, and get a better signal with the divergence at this low, okay. Another example, this is Shopee, the parent of Shopee company. Okay, move higher high, again divergence. Okay, you can see that again this is at the low. Again, there's divergence. Okay, so again, it shows the robustness of these two indicators, the moving average and the RSI. It doesn't work 100% of the time, but if you can get 80%, which is possible, this is good enough. Okay, 80%. Okay, the important thing is to have a stop loss risk management. Okay, so with 80%, you will be able to have a comfortable winning margin in this strategy. Okay, last stock, Amazon. Again, this is a trending stock. You can see that the trend can last for a very, very long period of time. If this is an uptrend, this is somewhere in October period, November period. Okay, this period here, November period, gets you in the trend until at this point here, it gets you out. So this is in April. So something like a 6-month uptrend. Okay, it can get you keep you in the uptrend for a 6-month period of time. Okay, I come to the end of the presentation. The next part of it is actually Q&A. So if you have any questions, I'm ready to take questions.
Nicholas?
Yes.
There's a question. What if the instrument is in a currency other than dollars, such as rupiah or other currencies?
Again, can you repeat the question?
It's actually in the chat, but it says that what if the instrument is in a currency other than dollars, such as rupiah or other currencies? I think we're talking about.
Okay. If you are looking at the Indonesian stock, okay, the Indonesian currency has 5 digits. Okay, so you can't use $2. My previous guide of using about 1% my previous guide of using 1%. So let's say if rupiah is 15,000, you may want to use or if the stock is 15,000 rupiah, you may want to use 1% of this number, 1,005. Okay, so that could be a rough guide. And to fine tune it, you use this 1,005, plot it on the Renko chart, see how is the price movement. If the price movement is too little, you may want to reduce it to 1,002 or 1,000. If it's too much, you may want to increase it to 1,000. So again, the rough guide is about 1%. You have to fine tune it with the volatility of that stock. Okay, so I hope that answer your question. Okay, the next question. Sorry.
Okay. It's okay,
Okay, I'll take the question directly from the chat. Okay, so can you use this chart pattern such as the flag pattern in the Renko chart? Okay, the flag pattern, do take note, is a short-term consolidation. It has a time period. Okay, if you look at if you look at John Murphy book, recommended not more than 3 weeks. But for Renko chart, there is no time period. There could be a flag pattern, but you will not know how long is this flag pattern. So in a way, you can use the flag pattern, but do take note, okay, using the date at the bottom of the screen as a reference. Okay, they are not actual date, but they can give you a reference to how long the flag pattern is consolidating. Okay, I've not used a flag pattern. Normally, I very simple usage with Renko chart. I use the M and W patterns. I use a reversal whenever there's a V-shaped reversal. Okay, a 2 bricks reversal, I will look to go long or to go short. I've looked at use trend line. Okay, I've actually used trend line as well, but I've not used flag pattern in Renko chart. Okay. Okay, the STI chart, sorry, I do not have the STI chart as an example, but you can use it on the STI chart. Okay, for me, I would recommend using 30 points as a single bricks, a predefined bricks. If you don't want to use a single brick, you can actually use ATR. The ATR will actually help to define or plot the brick size. Okay, so similar to the rupiah stocks, you can use the ATR. Okay, you can use ATR to define the box size. Okay, you can use ATR to define the box size. Okay, one more question. Is it possible to use all momentum indicators like stochastic? Okay, yes, it is possible to use momentum indicators like stochastic. You can use any momentum indicator as long as it use closing price. Okay, you can also use the price oscillator as well because there are 2 closing price involved. As long as the indicator has using closing price, you can plot it together with the Renko chart. The Renko chart will use the BRICS latest price as a closing price to plot the indicator, so it will still be helpful. Do take note, try to shorten the parameter size. And does it has to be with a short period? Okay. The period needs to be at least half the size of the normal parameter, because just now I explained already. Renko chart do not update. If you're using a daily chart, they may not be an update every day. There will only be an update if it meets the predefined requirement. If it's going up, you need a $2 continuation to go up from the previous closing. If there's a reversal, you need $4 in order to reverse if you are using a 2 box size of $2. Okay, so for 1 or 2 days, price may not meet that requirement, so there could be no update along the way. So if you use a long parameter, okay, it could take longer than 20 days. Okay, so my recommendation is to use a shorter time period. Okay, there's a question I'd like to ask about the Renko chart using the Zoom signal. Okay, the Zoom signal was poor early on. How can Renko chart be used to identify more accurate support and resistance level? Are they more effective in trending or sideways market? Renko chart has two usages. One of it is to look for trend movement. It gives you a better trend movement because it reduces the noise. Okay, so that is a trend movement. When it comes to support and resistance, okay, you can see, okay, let me go back to the chart earlier on. Okay, this is a Amazon chart. You can see there's resistance, there's support. Okay, for this, the trend is stronger, so the resistance and support is not so clear cut. If you look at this is C. Usually, when you reach the bottom, okay, this is where the support is. It gives you very good support. Whether you are a long-term, short-term, or position taker, okay, or swing trader, the support is very, very clear cut. You can trade off this support. Okay, so if you are long term, you may want to accumulate at this support and then look for price to go up. Short term wise, you can also use this support level to accumulate. If it goes below, you may want to cut your position by let's say if it goes below by if it breaks this low, it goes below by 2 boxes, you want to cut the position. But if it goes up, okay, you can continue to buy. Okay. Just now I was talking about how I use my point, the Renko chart. How I use Renko chart. Okay. Usually when there is a reversal, okay, it goes up, it goes down by 1 bar or 1 box, okay, I will look to sell. This is where my stop loss would be. Okay, this is where I will short. This is where my stop loss will be. So if you are long, looking for a long position, this is where you will go long. Okay, this area here, this is where you will go long. Okay, this is for short term. You go long, if it goes up, you hold your position. If it goes below here, by 1 more box or 2 more boxes, you will cut your position. Okay, you will cut your position. So this is how you can make use of the support and resistance to trade. Does the support and resistance is it very, very clear? I think it is okay. Not all the chart will show you clear support and resistance, but some charts show you good support and resistance. This example here, okay. This is a double. This is a lower low, then it goes back up again. Okay, this may not be a very good one, but if you look at it, the Renko chart gives you 2 types of trading style. One is to capture the trend. Okay, the others is to trade on the support and the resistance. Does the support and resistance work very well? You can see from here as well. Okay, this is where the previous low is. Okay, so this is slightly lower. Okay, but this is not lower. Okay, so this is how you can make use of the support and resistance. Okay. I can't find Renko indicator in investing.com. Okay, as you can see, my the chart that I took is from investing.com. So definitely this is from investing.com. Okay, so you just have to go to the chart type. You choose Renko. Okay. In Trading View, it is also the same. You just go to Trading View. Investing.com is a free version. Okay, Trading View may be a paid version, but for Trading View, version, there is actually a wick to the Renko chart, which indicate the actual high and the actual low. Okay. There are so many Renko. Okay, so there are many. Okay, you can use the traditional type. Okay, you can use the traditional type. Okay, any more questions? If not, I will hand back to the MC, the host for today.
Right. Thank you very much, Nicholas. For the benefit of, because we have participants from Indonesia, we have participants from all over. I mean, jika ada sesiapa yang ingin bertanya dalam bahasa bahasa Melayu, bahasa Indonesia, boleh juga kami boleh we can entertain questions in other languages other than I think Tagalog and Chinese or Mandarin. All right. I think there are no more questions on the chat, Nicholas. No more, right? All right. Okay. We've answered everything. Okay, done. All right. Without further ado, I mean, like the next we will actually put up the video from Jonathan Ravales on YouTube and also on Zoom for everyone to have a listen. And if you do have questions during the video or after the video, you can put it up in the chat, either in whatever language that you feel comfortable with. And we may, or we get translators if we don't understand it, and we will answer your questions accordingly. Pak Indra, are we ready with the video?
Yes, I'm ready. I'll share the screen.
All right.
And then we have a look at the presentation from Jonathan. Okay.
It's the time of the year that everyone wants to talk about where the markets. Good day, everyone. So it's the time of the year that everyone wants to talk about where the market's headed. So let's talk about what's in store for the rest of 2024 and beyond. Okay. So without further ado, let me talk about what my key views are on the market, and then we'll focus on the technical outlook of the markets. So the key view is that Goldilocks is with us. With the global easing to support growth, 10-year yields is seen to likely pause in the near term, but may still rise. That depends on who the next president of the United States will be. For the Philippines economy appears to be steady as she goes, with a potential 5.8% in 2024. 2025 ushers a potential 6.5%, driven by infra spending, election spending, and 100 basis point cut in the policy rates by the Philippine Central Bank. While we think that domestic inflation will probably average 3.6% in 2025, the BSP and will most likely continue its easing cycle, probably by at least just 100 basis points. They may probably cut reserve requirements before the end of 2024. So that will add the potential boost to the Philippine economy. Now, when we focus on the currency, there seems to be a potential modest improvement for the Philippines in 2025 at 55 on the back of a 100 basis point cut by the US Fed and improvements in the Philippine current account. While we think that there's still upside risks for the Philippine peso towards 55 in the near term in 2024, but could surprise to around 56.50 by year end, as we know who the next U.S. president will be. Now let's move on to where we think U.S. interest rates will be. So when focusing on the 10-year yields, in the near term, we'll probably see 3.25 to 3.5, but probably over a 6 to 12 month period, we could probably see rates revisiting close to 4.5 to 5%. Again, this could primarily be driven by the U.S. Uh, uh, the U.S. interest on its debt. So in terms of the 10-year VIVAL, which is the 10-year benchmark for the Philippines, we think that we could continue to consolidate between the 5.5 to around 6%. But over the medium term, I think the risks are still bound to the upside. So what pushed domestic interest rates lower? I guess the continued cut in U.S. interest rates, continued decline in domestic inflation, and the domestic market remains liquid. Of course, not to forget the 100 basis point that is expected by the Philippine Central Bank next year, and probably a quarter more towards the end of 2024. So, using Elliott wave analysis to be able to give us a guide, let's look at how it performs for the Philippine market. So, I think in general, looking at the Elliott wave, a five-wave pattern on an upside, and after a series of five waves, we get to see a major correction, which provides a ABC. Now, looking at the Philippines, it seems that the Philippines appears to be at the cusp of a corrective wave. Whether we are progressing to a big B wave, which could probably be between 7.5 to 8,000, Philippine interest rates continue to probably suggest that we are in a near-term corrective wave, while the Philippine peso, on the other hand, is at the beginning of a potential weakness, a potential third wave on the upside. So, looking at the dollar, it seems that we've seen a dollar peak, which suggests easing towards probably in the near term, mainly because on the back of the easing cycle of the US. So in terms of the long-term peso, as I said, the pressure mounts for further weakness. So the currency remains vulnerable to 57, but it may surprise to 55 depending on the outcome of the US election. Now, when we look at on a day-to-day basis, right now the near-term outlook favors towards the test of around 55.50, but end of 2024 we're looking at around 56.50 as people await who the next U.S. president is. So at the same time, there's still geopolitical risks ahead. So what could push the peso weaker? Geopolitical tensions, Trump's tariff war if elected, and of course, you might want to add climate-related issues, which could provide supply chain disruption. So that could push some commodities higher. So while the U.S. stock market appears to be getting a boost of the easing cycle of the U.S., the near-term outlook appears to be more of a bit overbought. So there could be some profit-taking ahead. Watch this space. So while the Philippines, the long-term uptrend remains intact, we are still on the verge of a potential breakout of a downtrend line. So whether we're going to probably break above 7,000 to probably give way to a much more extended wave B, closer to 8,000. So watch this space. So here's a daily picture of the situation. So the key level to watch is around 7,500 as we probably try to be nearing an end of a big B wave. So again, the drivers that could bring the equity market closer to 8,000 or 8,500 in spending, election spending, 100 basis point cut in Philippine interest rates by the central bank. So those three things could actually boost the market in the next 6 to 9 months. So what could push stocks higher? Local and international. One is that global central bank easing cycle, infrastructure spending, good corporate earnings, and for the Philippines, it's the tailwind from election spending. So while we look at commodities, we can probably see gold benefiting from the Fed's easing cycle. So the next stop could be at 3,000 before we get to see a much larger correction. While crude oil has eventually appeared to have topped, we could probably see some more consolidation, but I think the near-term risk is really more upside driven by geopolitical risks. So what could push commodities higher? Infrastructure spending will boost demand. Production cuts in oil, supply chain disruptions from geopolitics or climate hazard. Okay. So what to monitor from here on for a domestic front? Infrastructure rollout, further structural reforms passed in Congress, the 2025 midterm elections. While externally we are hopeful of speedy resolutions in the geopolitical front, Ukraine, the Middle East, uh, how developed market central bank actions would probably play in 2025, and of course, the US presidential elections. So with that, let me summarize today's presentation. The dollar stock rally has stalled. There's most likely going to be a modest decline in both US and local interest rates. Long-term uptrend in the stock market remains intact. Commodities have been off the highs, but could have some upsides, mainly due to geopolitical risks. So have a great day, everyone. This is my last slide. Thank you.
Well, thank you very much to Jonathan Ravalis. As
Yeah,
we say yes. Are there any questions, Indra?
if there's any question, they can ask, and then I can deliver the question to Jonathan through email, and then after he replies, then we reply to the question. So Bapak Ibu yang ingin bertanya silakan pakai bahasa Indonesia boleh. Nanti pertanyaannya ditulis. Saya akan kirim ke Jonathan lewat email. Nanti setelah Jonathan saya kirim kembali jawabannya. So silakan kalau ingin bertanya, please if you have a question, please ask now. Write down and type the question to the question and answer column. Thank you.
All right. Okay. As we say in Tagalog, magandang umaga. That means good morning. Right. Next, I should actually say, Zhou Shang Hao. Is that correct? That's good morning in Chinese, in Mandarin, isn't it?
Yeah, your pronunciation is good enough. 早上好.
Zhou Shang Hao. Now next we have Mr. Go Feng. Okay, from the China Association of Technical Analysts. Without further delay, let's hear what he has to say.
Yeah. Hello, everyone. Good morning or good evening. And I'm the assistant of the speaker, Mr. Go Fengwu. Firstly, I would like to share Go Fengwu's screen and say hello to everyone. Give me a second. Okay. I believe. Can you see him? Yes or no?
Yes, handsome guy.
Yes, Eva.
Thank you. 高老师，您跟大家打个招呼吧。
好的，听到声音是吧？
可以。
好的，大家好啊，我是高峰很高兴今天能够跟众多的读者进行分享。今天呢，重点给大家分享的是关于道德降价的秘密。
Hello everyone, and it's a very pleasure for me to join this webinar to see our colleagues from overseas. And today I would like to share my understanding about all the book. Now I would like to share a video which I have a class before.
Hello, fellow colleagues. I am Go Fengwu, and I am very pleased to have this opportunity to share with you what I know about technical analysis. Today, I would like to focus on a deeper analysis of the concept of order volume. First, let's explore a topic we often discuss, the four key elements of the stock market: volume, price, time, and space. Among these, volume is the most important, and its significance cannot be overstated. Only when you truly understand volume can you further study price, time, and space in a step-by-step manner. Now, let's move on to the content of today's lesson. This course will be divided into several major parts, but please note that not all parts will be covered in one session. Today, we will focus on the first major part, the exploration of the mystery of volume price bottoms, also known as the study of tops and bottoms. In the future, we will discuss turning points, and in later sessions, we will also cover topics like trading. Before diving into the study of trading volume, I would like to introduce an important figure, Timothy Orr. He is a renowned trading expert from the United States, particularly skilled in analyzing trading volume, and is recognized as an expert in the study of order volume. His name is closely linked to volume, and his research is primarily focused on volume. Timothy Ord holds bachelor's degrees in mathematics and education, with a deep interest in mathematics, which is fully reflected in his trading methods. His approach integrates numerous mathematical calculations, making trading more precise and efficient. With nearly 25 years of investment experience, he enjoys a stellar reputation in the financial industry and is highly respected by his peers. Not only is Timothy Ord highly skilled, but his character is also widely praised. He has served as a vice president and senior options trader for financial services firms and brokerage companies, further demonstrating his professional expertise and market influence. Timothy Ord has also achieved remarkable success in the field of trading. He participated in the U.S. Robbins Cup Futures Trading Championship, where he placed fourth, competing alongside prominent figures such as Larry Williams, the founder of the Williams Indicator. Additionally, he was named the top gold trader of the year by Timer Digest magazine, an honor that further attests to his trading skills and market standing. Timothy Ord has written several popular investment reports and books, The Secret of Volume and Price being especially beloved by investors. Although the TT indicator he developed is proprietary and not directly accessible to us, his Ord volume method provides us with invaluable trading insights. We will also focus on Timothy Ord's methods as the main topic of our upcoming study. The relationship between volume and price is undoubtedly the core issue in market trend trading. Once you deconstruct this relationship, it's akin to revealing the hidden cards of the market. These cards are volume and price. Once you understand the relationship between volume and price, you've essentially uncovered the core of market trading. Some may still wonder, what is the true core of the market? The answer is clear: volume and price. Timothy Ord offers us an analytical tool that leads to wealth. He has his own proprietary indicator, the TT indicator. We cannot directly access this tool at the moment. However, he also developed a unique method called the Ord volume, which which we can study in depth. One of the key advantages of the ORD volume is its ability to accurately determine the market's bullish and bearish trends, helping us grasp the transitions between bull and bear markets. Timothy Ord's secret of volume and price not only reveals how to accurately identify bullish and bearish trends in the market, but also teaches us how to spot potential highs and lows, allowing us to time our market entry precisely. His method helps us find sectors that align with market trends. He further explains that after determining the overall trend, we must identify the optimal trading sectors and then focus on the strongest stocks within those sectors. Throughout the study of the secret of volume and price, in addition to the points mentioned above, Timothy Ord provides us with a comprehensive thought process. First, identify the broader market trend, then find the right sector, and within that sector, search for the dark horse stock. This is a refined summary of his approach. That concludes the introduction to Timothy Ord. I believe everyone now has a clear understanding of him. Next, we will officially begin explaining the course content. In the first part of the official content, we will focus on an overview of volume analysis methods. In any market, two key factors must not be overlooked. These are valuable insights summarized by Timothy Ord. The first two key factors are price and the corresponding volume. In other words, you need to have a clear understanding of price and know the volume of each price point. This is especially important. In previous lessons, I've repeatedly emphasized the iron triangle theory. The iron triangle refers to the close relationship between volume, price, and time. Specifically, volume comes first, followed by the price structure, which over time forms the trend line. These three elements form the foundation of market analysis. However, here we focus more on the combination of volume bars, price bars, and the volume trend line. Together, these form the iron triangle of our volume analysis. Price in the investment field is the representation of the value agreed upon by both buyers and sellers in the transaction. At each price level, the frequency of buying and selling activity directly determines the volume. For any stock, buyers and sellers must ultimately reach a consensus price to complete the transaction, which creates trading volume. This process involves finding a balance point, a price that both parties can accept, resulting in a completed trade. In short, trading volume is a crucial factor driving price changes. When demand for a stock increases, i.e. more buyers enter the market, the stock price tends to rise. Conversely, if the supply side, i.e. sellers, dominates, the stock price will decline. Thus, we can say that when there are more buyers, the stock goes up. To buy stocks, you need to raise your bids to attract sellers. If someone offers $10, I might offer $11. If someone offers $11, I might offer $21. So, can you buy it this way? Absolutely. It's like during the pandemic when a cabbage costs $5 a pound and you can't get it. But if I offer you $50, would you sell? Of course you would, right? This illustrates the relationship between supply and demand. When buying increases, sellers will naturally adjust their strategies. At this moment, if everyone thinks this stock is worthless and wants to sell, how can they sell it? If you list it at a high price, will it sell? Clearly it won't. So what do? You have to list it at a lower price. For example, if the current price is $10 per share and I list it at $9, it will definitely sell. What about $8? That would likely sell too. This shows that stock prices naturally fluctuate with the listing price. The lower you list, the more the stock price will drop. In the study of stocks, trading volume is a significant factor driving price changes. For any market analysis or learning, volume is extremely important. In fact, volume analysis is an essential knowledge skill that market investors must master. Remember, this is one of the most crucial skills you need to possess. Unfortunately, very few traders know how to use volume correctly. While everyone understands the concept of volume, not many can apply it effectively. This is an area where many investors fall short. Therefore, through this series of courses, we aim to teach you how to apply volume correctly. As we mentioned earlier, using text and images can provide a more intuitive understanding. Conversely, when the price rises, volume tends to increase, which further propels the price upward. When the price drops again, volume may start to contract. Then if the price rises again, volume will also increase. Thus, you'll notice that during an uptrend, increasing volume is needed to drive the market higher, while during a downtrend, volume tends to contract, leading to a downward movement with reduced volume. I want to mention the three precedents of volume we discussed in previous lessons. The first is selling precedes buying, the second is price precedes volume, and the third is the big player acts before the retail investor. Why do we say selling precedes buying? This is because after a stock is issued and listed, it initially concentrates in the hands of a few people. If these people don't sell their stocks, there won't be any trading volume in the market. In other words, if no one sells, you can't buy stocks. So under what circumstances would stockholders choose to sell? Most of the time, it's when the price is favorable, meaning that the price you offer satisfies the holder, prompting them to sell. Of course, there are cases where they need money urgently and have to sell, but this situation is relatively rare. Next, regarding price precedes volume, the creators of price or desire are often the market makers. They influence prices through their operations, triggering buying and selling behavior in the market, which generates trading volume. Therefore, changes in price usually occur before changes in volume. Finally, the big player acts before the retail investors, means that market makers already have a clear operational plan and goals before retail investors do. They guide market trends through their capital and information advantages, while retail investors often follow the buying and selling actions of the market makers. This is what we've consistently advocated regarding the three precedents of volume in our earlier discussions. When you analyze a stock and determine buying and selling points, you should always keep these three precedents in mind. If you can understand and apply these principles well, your comprehension of trading volume will become clearer and deeper. Now let's continue. After this stock experienced a decline, its trading volume shrank. Following the contraction in volume, the price began to quietly rebound at this position, rising higher. However, during this quiet rebound, trading volume did not show a significant increase. Why? Because during this phase of gradual market recovery, many people do not believe that the market will truly rebound, so they do not actively engage in trading, resulting in low volume. As the market gradually strengthens and volume begins to increase, the stock price is truly pulled upward. However, after the stock price reaches a certain height, you'll notice another issue. During the continued rise and attack of the stock price, the volume begins to show a noticeable shrinkage. Generally speaking, price increases are driven by trading volume, but now we see rising prices alongside decreasing volume, which usually indicates a potential market shift. Upon further observation, we may find that the bull market is beginning to turn, signaling that a bear market may be approaching. As a result, the stock price might experience a long period of decline, followed by a rebound, then another drop. Here we primarily discuss the overall market situation, reflecting an overview of volume method. In the trend of stock prices, changes in trading volume play a decisive role. The momentum of price fluctuations and oscillations comes from volume. When prices rise and fall and begin to oscillate, this oscillation originates from changes in volume. To more accurately assess market trends, we can test the trading volume of a stock at extreme high or low price turning points and compare it with the volume at the nearest turning point. This method, which we have been exploring, the left push method, can help us determine whether the current highs and lows are price turning points in the market. Therefore, investors need to closely monitor changes in trading volume. It acts like a special driving force, continuously influencing stock price movements in the market. By observing changes in volume, investors can better seize market opportunities and make more informed investment decisions. Turning points refer to the highest or lowest points where a stock price changes trend. This is something we need to clarify. From the analysis above, we arrive at two important conclusions that can help you better understand and recognize trading volume. The first conclusion is that in an upward trend, during the phase of halting a decline and rebounding, we must first determine what trend the stock is in. If a stock shows signs of halting its decline after a pullback during an upward move, then the volume during the rebound should be greater than the volume during the pullback. This means that the volume during the rebound should be more significant than the volume during the price drop, which is an important volume characteristic in an upward trend. Next, regarding the alternating process of declines and rebounds, each rebound's trading volume should be greater than the volume of the previous decline. This This is an important rule regarding volume in an upward trend. We need to remember this to better grasp the trend in practical operation. What about in a downward trend? When the stock price begins to decline, how does the trading volume change? During the decline, if a rebound occurs, the volume during the rebound will typically be less than the volume during the decline. This indicates that although the stock price may rise, the market continues to maintain its original downward trend, and the volume is signaling this to us. Therefore, trading volume is not only a reflection of market trends, but also the core of trend changes. Through trading volume, we can clearly judge the market's movements and changes. Whether it's the pullbacks and rebounds during an upward trend or the rebounds and continued declines during a downward trend, trading volume provides us with important clues and signals. Finally, the average daily trading volume between turning points, known as the odd volume, is also an important concept in volume analysis. Turning points refer to the highs and lows in price trends. Odd volume is a measure of the average daily trading volume between these turning points. By calculating odd volume, we can gain deeper insights into market trends and changes, providing stronger support for investment decisions. This concludes the 2 key points we've summarized during our overview of volume analysis methods. I hope you can remember these key points and apply them in practical operations. Next, we will use a chart to further introduce the concept of average daily trading volume between turning points, odd volume. The average daily trading volume between turning points is referred to as odd volume. This odd volume serves as a foundation for our volume analysis. Let's look at a specific example. Take this stock, Nanwatech. You can see that during the upward movement of the stock price from this position, a turning point, to this position, another turning point, here is a low point, and over there is a high point. These 2 points define a range of turning points in the market. To calculate the average daily trading volume within this turning point range, we divide the total trading volume within the range by the number of trading days. From the low to the high, there are a total of 36 trading days, with a total trading volume of 15,855,000 hands. Thus, the average daily trading volume is the total volume divided by 36, which is about 440,000 hands. Now let's look at the process of price decline. Similarly, from the high point to the low point, we also have a range of turning points. This range took 10 days, and the cumulative trading volume was 5,827,000 hands. Therefore, the average daily trading volume is about 582,000 hands. Now, we can compare the trading volumes in different phases. In an upward trend, the rebound volume after a pullback should theoretically be greater than the volume during the pullback. However, in this example, we find that the average daily trading volume during the rebound, 547,000 hands, is actually less than the average daily trading volume during the previous decline, 582,000 hands. This situation may indicate insufficient market momentum or that the trend may be shifting. Furthermore, if this situation occurs in a downward trend, where the rebound volume is less than the volume during the previous decline, it is a clearer signal that the market may continue to maintain its downward trend. Thus, by observing and analyzing the average daily trading volume between turning points, odd volume, we can better grasp market movements and trend changes. If you encounter such a situation, you should consider that it might signal the end of the bull market. So what will the market enter next? Right? A decline marking the beginning of a downward trend, transitioning from the previous upward trend to a downward trend. Additionally, throughout the first wave of decline, you can see that the upward momentum, like the 440,000 hands of trading volume, had previously driven the stock price up. But during the decline, this momentum has exceeded that of the earlier rise, indicating that the dominant force in the market has shifted from buyers to sellers, resulting in the stock price starting to decline. During the rebound process, sellers still hold the advantage, making continued price decline quite normal. This is how we use trading volume to assess the essence of market operation. Looking at the decline process, the trading volume for this drop was 493,000 hands, a decrease from the previous wave's 582,000 hands, indicating that the momentum of the decline is starting to weaken. This suggests that the stock price may begin to form an upward trend, signaling the arrival of a market bottom. As the downward momentum further weakens, the the signs of a market bottom become increasingly apparent. In each wave of decline, the trading volume is smaller than the previous wave, indicating that the downward momentum is gradually dissipating and the bottom is approaching. When the market rebounds again, we can see that the upward momentum gradually strengthens. For instance, the average daily trading volume for this wave of increase was 367,000 hands, while the next wave reached 379,000 hands, clearly higher than the previous wave, indicating that the upward trend continues. However, during the upward movement, we must also pay attention to changes in momentum. If a particular wave of upward momentum significantly weakens compared to the previous wave, it may suggest that the breakout could be a false breakout. But in this example, the upward momentum continues to strengthen as 582,000 hands exceed the earlier levels, indicating that the stock price is likely to continue rising. Simultaneously, during the adjustment process, we can also judge market trends by observing the downward momentum. If the downward momentum gradually weakens, the market is likely to maintain an upward trend. If the downward momentum strengthens, the market may continue to create new lows. We can understand the intrinsic momentum behind the market's movements. For Timothy Ode, he views Ode volume as a form of energy or driving force behind stock price movements. You should also adopt this perspective. Once you step into his world and follow his philosophy, your understanding of trading volume will change. This is the momentum of stock price movement. The greater the energy, the stronger the conviction among market participants, whether it's bullish or bearish momentum. In this process, the concept of intention is the most powerful and significant. With the support of this intention, prices will naturally rise or fall as they should. We assess market trends through Ode volume, which reflects this intrinsic momentum or driving force. Using the graphic above, let's explore and learn about Ode volume. You should now have a preliminary understanding.
This is the Mr. Gopal's previous class, and he would like to share his knowledge with everyone. And if there is any question, I can ask him immediately, and he can answer us. Okay. Yes. Today this class is very basic, and later if you want to learn all the volume, and you can discuss with them or to talk with the Team C Ord. Okay. Thank you so much.
So no questions. Tiada soalan dari Indonesia atau Malaysia ya?
Yeah, there's a question over there.
Tiada. Ini tak apa.
Yeah, there's a question from Lily.
Yep. Okay. Let me read it. Wait a moment. Give me a second. Let me translate your question to Mr. Go Fengwu.
Well, Eva is translating the question to Mr. Go Fengwu. I've actually shared with you guys the profile of biodata of Mr. Go Fengwu.
Okay. Hello. Mr. Gofeng said when he treat the forest or commodity, they also use the same way like the or the volume, use the same way to treat as TOC instrument. Okay, there is nice question. Okay, wait a moment. The next question is, would you more explain how we determined the, determine the average daily trading volume? Wait a moment. The average, okay, the average daily trading volume, the calculation is, firstly, you found the highest high and the lowest low, and to calculate the total volume, and divide the trading date, and this is the how to calculate the average, the daily average volume. The next question.
Teresa, Eva has answered your question. The next question is actually, I'll read it out while Eva is translating the question to Mr. Feng Wu, and she will come back to us with the English version of the answer. The next question which was asked was by Zaki Nabil. I'd like to ask about volume analysis and trading. What should I look for in volume patterns when analyzing charts to avoid false biases? Additionally, in volatile market conditions, how can I ensure that the volume analysis remains relevant and not misleading? Right, we await the answer from Eva.
Okay, for the first question, what should I look for in volume pattern? Okay, what should I look for in volume patterns when analyzing the charting to avoid the false basis? Like when there is a real breakout, there must the volume should be higher than the previous volume twice time. The next question is
Find amount, you can put in $2, but you can use
okay. The next question, in volatile market conditions, how can I ensure that volume? I cannot find the question, but how can I ensure not to be misunderstanding? The answer is still we should focus on the volume ratio. If like when there is a real breakout, the volume should be the twice times than before, and if there is probably 5% of the previous volume, I mean higher the volume, that means probably it is a false breakout. I see there is another Lily's question. Where can I find all the volume indicator and use it at the charting platform? Give me a second. The answer is.
你这一个阶段到底多少成交量，然后除以3个总就可以。
Okay. The answer of this question is you can when you know the order volume, you can calculate by yourself and use the use the volume of the period of time and divide the trade date. So you don't need to find the indicator. Actually, the indicator which provided by the teams out is the TT indicator. It's not all the volume. We can calculate all the volume by ourselves. Okay. Next question is.
There was one question by Adria, Eva.
Yeah. I'm reading that. Yeah.
While Eva is getting the translation, the question is actually, what is the correlation between space and volume, price and time? Kita masih menunggu jawapan pada soalan apakah korelasi between space and volume and price and time.
Okay, sorry to let you wait a long time. And this question is, firstly, we talk about time. If in the previous market and there is a long going up trend, and probably the time of this uptrend will have in the future will related about the future market, and probably in the future market maybe the time of the uptrend is the same with the future. That means the time the period of time is similar of the two market of the two two market, yes. And the next is the volume. And the volume is like if there is a one day with the largest volume, and with this candlestick, and probably the price of this candlestick has is the major resistance or major support. So this price probably will relate about the future price. The future price probably will relate about this price. So the same if in the past, if the past market, if there is a resistance or the support, so the price of the resistance and support is related about the future resistance and support. This is the speaker's answer.
All right. Thank you, Eva. Thank you, Mr. Gofengu. Are there any questions, Robert? All right. No more questions. We'd like to Thank you very much to Mr. Wu Feng Wu and Eva for translating. Hopefully we'll see you in China in October. All right.
Yes, yeah. I mean, if the people join the conference in October, you can see Mr. Gong in person.
All right. Thank you so much. Thank you so much, Eva. Going on to the next speaker, we have, hang on, we have Mr. Muhammad Danditra from Asosiasi Analis Technical Indonesia, the Indonesian Technical Analyst Society. He's an individual with expertise, a young man in fact, individual with expertise in technical analysis who has been utilizing his knowledge to allocate capital market assets in alignment with the tactical asset allocation strategy. He's been studying data science and currently employing his time series analysis to forecast the prices of financial instruments such as stocks and bonds. Do we have Mr. Dandi? Ada?
Hello.
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 Dandi.
Hello.
Hello. Okay.
Okay.
You.
Okay. Thank you, Ms. Hani. Allow me to share screen.
Yes.
Okay. I hope my presentation can be seen by anyone. Good afternoon, anyone. I'm so happy to be able to join in this webinar and then get an opportunity to share what I do, and hopefully this will give you guys an insight and especially inspirations so that we can upgrade our knowledge. It's like I do. It's like I'm doing. Yes, I'm still learning. Basically, what I want to share is how I combine technical analysis with the data science, with the technology that normally used by data scientists or machine learning specialists. But by the end of the day, I still consider myself as a technical analyst, not the data scientist, like the cool guy from San Francisco or Silicon Valley. So in order to do that, I still have to remind myself that, as a person, as an analyst, we still have to gain knowledge, the basic knowledge and deeper knowledge about our data and how do we want to combine and how do we want to invest, how do we want to use it to invest or to trade our asset. Okay. So basically, while I'm still learning the data science and machine learning, and then maybe if you guys still remember the last year I presented in Jakarta in our IFTA conference, I present technical time series analysis and forecasting, right? And as I learn the science, as I learn the time series analysis, it struck me that I think this is just technical analysis that we know, right? This is just technical analysis that we understand. So based on that, I try to study technical analysis within the concept of time series analysis. I think the similarity is so uncanny. Okay, this is the topics that I would like to share today. Maybe the part where clustering algorithm is the main point, and please allow me to share a little bit about those algorithms. Okay, first of all, I mean, why do we need to combine, right? I mean, as a technical analyst for trading or for investing, even for me, in my company, that's enough. I mean, managing quite fund for institutional, I think just only using technical analysis it should be enough to generate ideas, to tell my boss what to buy, what to sell, how to managing or navigating the volatility. Right? Back in my office, I use fundamental and macroeconomy just for explaining the board of director what happened and what am I suggesting. But in reality, for myself, what to do with our investment, I'm enough using technical analysis. So why do we need to combine? I think there are several reasons to benefit from the combination of technical analysis and data science. These are the reasons, and I think the box colored, the light colored box is the main point that I would like to emphasize. So the first is, of course, we want to improve our accuracy and time series analysis. The algorithms that are used in time series analysis can be proven to increase the accuracy. Pattern recognition, I mean, we really know a lot. We really understand so much about the subjectivity of analyzing pattern, such as chart pattern and candlestick pattern. And I think this is the reason why the beginner technical analyst or the experienced technical analyst will see a different pattern. So with the help of technology, with the help of algorithms, pattern recognition can be increase its accuracy to read or to analyze a certain asset. And of course, we know that there are automatic trading strategy, algorithmic trading. Of course, they use data science or machine learning. And I think backtesting, for those who use backtesting a lot in the technical analysis application like MetaStock, Honeybook, or even TradingView, this thing, there are. I mean, the platform that used to do the data science or machine learning, I think they have quite a lot of better infrastructure. Like if you read the how Google or Microsoft invest billions of dollars in infrastructure, can you imagine if you use it for backtesting? Not only it will increase the speed, but it will also increase the capacity of the capacity of the backtesting itself. And the last is why I combine technical analysis and data science is, as a person, I would like to generate more ideas. I mean, like for my company, right? I need to be able to do the exploration. I need to be able to generate what to do, how to do, and the most important thing is to convince my management, and of course, for us to do the analysis, how to influence or make people believe about our analysis. Okay, before I show you my work, I combine Army Broker. It's part of MetaStock. Just like MetaStock, I use Army Broker, and then I use R. I think most people use Python, and I believe many of you already know the software. I still use Army Broker as a main computation to get the technical analysis aspect, because I think Army Broker as a technical analysis software generate the technical data more efficiently than the R. It's because I still use my laptop. I don't have the infrastructure like a data center or something. So it's still better using the specific software. But then the data that generate from Army Broker, I process it with R. So most of the graph that will be shown in my presentation are produced by R. Okay, first of all, the stock screening. This is the basic stock screening. Like I think we all done it our way. This is my way. So basically, I try to avoid Excel. So by Excel, I use R to visualize the result. So normally we use tabular data full of column and rows from the brick by brick into the X and Y graph like this. I think it's easier for us, for analysts, and most people that saw this, I think they prefer the graph like this. Right? And then also it can be combined, it can be modified as we need, especially from the X or Y scale. And then we can use the color to differentiate. And what I like in this graph is that we can gain the bigger picture, right? I mean, we can easily understand the whole picture. We can easily spot something that we like to notice and we like to check further, like this. And this is for the stock. I know that the more data we have, maybe the more confusing it gets. Yes, absolutely. But then it's like I said before, we need to gain, or we can easily get a bigger picture by seeing what you want to see, right? So imagine this is the whole stock universe. It contains 65 stocks that I pre-selected before. This is just for one date only, one trading date. And it gets confusing if you use a certain business model. But then this is just the part one of the graph that I would like to see, just to get the bigger picture, just to get to understand what the market is doing. I mean, for example, this is the date from September 17, 18, 19, and 20. Just looking at this graph, I think we can see that there are a lot of green stock in the 19, but then the green stock, the green color stock in the 20, I think they fall a little bit, right? So I think in my mind, okay, something happened with the market, something happened with the price. I think some of them is still profit, but tend to lower. So I think that's a sign that the broad market is getting weaker. And then, just like I said, it is stock screening, right? So what I try to do in screening using data visualization like this is there are multiple steps, there are several steps, and this is the step one. This is the other graph that I use, especially to screen stock. Okay, the first one, the step one is I divide the stock within one day into four graphs with the different trend. There is uptrend and downtrend, and somehow I try to select the stock that just newly turned into uptrend and newly turned into downtrend. So this is the basic picture. Okay, this is the first stock that are divided by the trend. Now let's see. I mean, I want to check if they have the different category. Like I try to avoid the stock that has the sell sign. So this is just the stock with the buy sign. Okay, and then I try to select stock that has sorry, the step 2. This is the stock that are already uptrend. So this is the stock that already uptrend, and then this is the stocks with the buy stop only, buy sign only. And then the step 4 is the stock that I would like to buy, or this is the stocks that I will put it on my list and maybe share to my team or to my clients. Yeah, this is the good stock based on September 20. Okay, and then of course, technical analyst, we still read charts, right? Graphical chart, and then from this selected stocks, it automatically can be shown. The graph can be shown like this. So this is the final report that I share to my colleague, to my client, and especially to my management. And since we use technology, so all of this is almost automatically. We just have to press next to show the different graph. Okay, now comes to the clustering algorithms. And before I show you the work that I'm doing, allow me to explain or share some information about a clustering algorithm. Okay, as you know from machine learning algorithm, from the machine learning world, there are at least 2 big categories: supervised learning and unsupervised learning. And you see the regression. Maybe we all already familiar with the regression. Mostly linear regression. That's the basic statistic. So the algorithm like regression fall into the supervised category, supervised learning. Basically, this is the supervised learning means that we know the outcome. We just have to train the data. But in unsupervised learning, I mean, we rely or we let the algorithm choose the outcome of the output for us. So we don't know the result because we let the algorithm give the result for us, right? And somehow it can be surprising. It can be as predicted, but still I prefer the output from the unsupervised learning to be predicted because I need to gain control over what I do. So basically, the clustering algorithm means that we use it, and we ask algorithm to, okay, please categorize the data into certain category so that we can use it for further process. So this is how I use clustering algorithm. First, I try to understand deeply my data set. First is the market data, is the technical data, like such as price, return, as the indicators like stochastic, moving average, right? The basic data. And then I try to set the number of categories. Usually I use 4 categories in clustering. So it means for cluster. And then once the algorithm select the stock that fall into each cluster and try to understand how the characteristic in each clusters, and then after that I will use I think I love the stock in cluster 2, and maybe those stock in cluster 2 I will try to suggest to clients or even create a portfolio for me. And that's what I show. That's what I will show you in the last topic of this presentation. Okay, so basically, if we try to categorize by ourselves, by our as a human, I mean, if you only try to categorize two dimensions, like okay, I have 100 stocks with the stochastic and percentage growth band. Maybe if I want to divide them, I will try to I want to see the oversold stochastic and percentage above 50. Right? And using the same graph like before, this is all the best. I think this is all the best stock that fall into the category. I mean, all the stochastic is oversold in here. Sorry, in here, and then all the percentage BB above 50, it means that it's above middle band of Bollinger Band, right? So all the stocks is considered uptrend by me, and then I just have to find the stock that is low in Y scale. So like Main, KLDF, Adaro, BMRI, AMRT, this is the good stock for based on this. But how about dimension more than 2, 3 dimension, 4 dimension, right? And that's how I use clustering algorithm. Okay, this is the example of clustering multiple returns. I have 1-day return, 5-day return, 20 days return, 60-day return, and year-to-date return. So at least five returns from the date of September 20. And this is my clustering algorithm show. So there are 4 clusters. Cluster 1, cluster 2, cluster 3, and cluster 4. And if I try to put them in the graphic of XY, I have to put so what the X scale or Y scale, and this is the graphic. This is the graph. I mean, like, it doesn't mean that the clustering only consider cluster 1 means that they have to give year-to-date return more than 50%. Doesn't mean that. But turns out all of the dimension, the return dimension, like I said, 1-day return, 5-day return, at least five multiple returns. The clustering algorithm try to put this stock in cluster 1 as a stock with a year-to-date return more than 50%. And of course, if you have the different return, and the cluster will be different also, right? So I do it every time. I do it every time. The clustering algorithm will recalculate every time I process it. Okay, this is just the clustering for multiple returns. Now, how about a cluster for multiple time frame stochastic oscillator, like daily, weekly, and monthly stochastic oscillator? And this is the result. This is the result. To make it easier for us to understand, again, I use XY graph. Y scale is for weekly stochastic oscillator. So that means that I use 5 days parameter in stochastic. But in weekly, it means that I use a weekly time frame. And for the X graph, I use monthly stochastic. It's still 5 days parameter, 5 parameters of 5. But even within, I use a monthly time frame. So this is the graph. This is the graph, and there's still 4 clusters. So that means if we try to look at this, in my opinion, I think cluster 1 consists of stocks that are still oversold, mega oversold, because the weekly stochastic and the monthly stochastic below 50, maybe around 20 or 40, right? So I think if you want to find stocks that okay, I wanna buy stock today and for medium or long term, I think the stock that falls into cluster 1 are a good one to start. I mean, yeah, of course, I suggest that we have to check and recheck again. But then this is the ideas, and I will put all the stock in cluster 1 in my to-do list. Okay, and last cluster is this is the Kyrie. Kyrie means, for, if I'm not mistaken, Kyrie means the distance close to moving average. Right? I mean, because I love to check whether the stock fall to rise too much from the middle, from the average, or down too much. Because I believe in mean reversion strategy. It's just like what we used to study in the basic moving average, right? Because price will not move too much, will not differ too much from moving average. So I always calculate the difference between the current price to the average. Turns out, in some technical analysis application, the indicator is named Kyrie. So this is the Kyrie of 5 days moving average, 20 days moving average, 60 days, and then the good old 200 days. So this is the category. This is the graph from 5 days and 1 days. If you look at here, we can understand that stock with the cluster 1, if we put it in the graph of return, turns out the cluster 1 means that they have positive in 1 day return. I mean, based on the 20 September trading day, the stock that falls into category cluster 1, they jump in the last trading day. So this is the example of what I do using clustering algorithm, just to generate ideas and help me, to check what stuff that I need to deeply research for this. And then chart plotting. This is the last two. In chart plotting, of course, as a technical analyst, I still prefer the specific or the specialized technical analysis software. I use Broker, by the way. Right now, I think we all use TradingView, just like I do. But then I use also R that helps me to construct the graph. Okay, what I do is, even though I subscribe as a paid user in TradingView, my subscription is only able to create four graphs. But if I subscribe more expensive tier, they can give me until up to eight charts, right? And it's pretty much expensive. My company only allow me to subscribe in Pro, so I can only show 4 graphs in one. But R the data science application give me a lot more option, so I can easily I can easily show as much as I can see the graph. So this is all the stock. I forgot what this is the country, but as you can see, almost, I don't know, 15 stocks or 20 stocks. And again, I only want to see the big picture, and then because I want to see because I want to give some ideas. Of course, I don't get a lot from this side, but at least this gives me an idea the stocks that I will check further, and based on this, I will deeply research using the same old technique. Okay, so I think again, as a to give you an insight or inspiration, this is the data science that can be used by us technical analysts. So the last topic that I think is also interesting, that imagine if we have the cluster stock, if we have the stock that already in each cluster, right? And of course, we want to see, okay, if I buy the stocks from the cluster 1, whether I will profit or not, right? Okay, why not backtesting it? Right? So this is the topic about the portfolio backtesting. But before I show you my work, I have my limitation. Since the outstanding shares to calculate market cap, maybe you can get it from anywhere. Right? Although now, sadly, Yahoo Finance, you cannot retrieve the data from Yahoo Finance anymore, because I don't know, but in my community, we were talking about this, and somehow the summary is the conclusion. Yahoo Finance stopped giving me the free data, but otherwise, to calculate market caps, I think it's easier. But if you want to compare the market cap of one stock to the index that you want to follow, that's a different story. Because I don't know, but I still find it difficult to get comparing. I mean, how much the stock weight according to index. So that limits my ability to do the research, because somehow I want to construct a portfolio with the benchmark of the index. But then you have to know in the index what weight the stock. I mean, I will follow the 5 biggest stock in index, but I find it difficult to get the stock weight in index. So all of this, all of the return that I will show you soon, it's constructing with the equal weight portfolio. It doesn't really interest me actually, but maybe if I find the easy way to get the market cap, the weight index, I will be able to construct comparing with the index. So, for example, once we use clustering daily, weekly, and monthly stochastic oscillator, we want to set for the cluster 1. Imagine if you buy all the stock in cluster 1, are we gonna get profit or not? So before I show you the result, this is the stocks that fall into cluster 1. And of course, since the testing means that you have to buy in the past. So this is the return if you bought it equally 20 days ago. So that means that if you buy all the stock that falls into cluster 1, you get loss. Okay, and then this is another cluster. This is cluster of Kyrie. Kyrie of 5 moving average, 20 moving average, 60 moving average, and 20 days moving average. And this is the stock that falls into each cluster. So imagine, okay, since I use XY graph for return, so if the stock that falls into cluster 4 means that the stock with the high 1-day return. And this is the stocks that fall into cluster 1. And imagine if you bought it 20 days ago and you get profit. How about the other cluster? Of course, you can do that. So this is the stock from cluster 2. But if you bought it in 20 days ago, unfortunately, you get loss. Okay, I think that's all. I will go to the conclusion. So again, I'm a technical analyst in my core, so I try to avoid the machine learning guy or tech guy like in Silicon Valley. So that's why I always eager to how can I improve my technical analysis using data science, using the machine learning, using the technology. Still, I will still be a technical analyst. And of course, as a trader, investor, or even analyst, we can use algorithm to generate ideas. At the simplest example, I mean, we can ask ChatGPT, right? Okay, ChatGPT, what do you give me an insight of what to do during the corporate cycle? Something like that. But we employing machine learning, I think it's easier for us to generate ideas what to do based on historical, based on cycle or something. And the number 3 is I try to avoid machine learning to handle observation because I like to still have control. So that's why maybe as a technical analyst, we understand, right? We should already understand about the high frequency trading or algorithm trading, right? I don't even like doing indicator trading because I still want to able to, okay, even though there is a signal, a buy signal from moving average, I don't really believe that right away. I mean, I want to see the chart, I want to see the volume, I want to see with my own eyes whether it's a good opportunity or not. And number 4 is, of course, those guys are the one who, the programmer, right, are the one who create the program that helps us doing anything. And I think what I show you will be much easier if it is made into the application program. And somehow, I still need to learn it how to create an application. So if I can do that instead of the interactive report like I showed you, I think we'll be still, I just have to be lazy to do that, but maybe that's for another. Okay, I think that's all. Yes, honey. Maybe if there are questions, yeah.
Yes, thank you. But then we look forward to your apps. Very excited.
Okay.
For a long way ahead of you, and Alhamdulillah, you do technical analysis to actually to the world. I wait for the apps which will be named after you, or the indicators or whatever that you're going to come up with.
All right. Another
Ada soalan dari ini, ramai orang Indonesia ni attend Pak Indra?
Yeah, I think there are a lot of Indonesian people.
Yes. Okay, so if there's no questions at the moment, we will go ahead to the next speaker. Thank you very much for sharing your
Thank you.
insight, Gandhi, and good luck you'll be a speaker, right? In
No, unfortunately, I did not come to that.
All right.
This
Okay.
time, at this time.
Not this time. Okay. So for the next speaker, we have. Let me share the screen.
With this question.
Oh, next question. Okay. But then ada soalan.
Yeah.
Question.
Yeah. Live data. Well, if you ask, well, I mean, yeah, I also have to say in this that but even our IPX doesn't really are generous in terms of providing us the data. So if you want to get the live data, yes, you can, but you have to pay, and sadly you will be paying as an institutional client, and so the price is quite expensive for individual. But if you want to get the live data, I suggest to subscribe in TradingView, and they have neither subscription fee, but I think it's cheaper than if you go directly go to IDX. So in TradingView, yeah, they provide a live data for certain month. Okay, another question. Okay, if you compare data from several, you can see project. Basic. Okay, in terms of visualization, yes, RLG is also my biggest inspiration. I mean, how I love data visualization, but that's all. That's data visualization. It shows you the current condition easily, but then you have to think for yourself about the projection. But if you want to use projection, you have to employ another algorithm, forecasting algorithm. But to answer your question, technically, yes. Technically, if you compile data for several days or several weeks, you can see the trajectory, but that means that you are doing forecasting with the algorithm, with the forecasting algorithm. That's all.
Adandi.
Yes.
How? Gimana if from the clustering all the signal showing you buying signal, tapi semuanya. So which one you gonna choose? Like let's say from the stock that you put on the system, giving a buying signal. So which one you gonna choose? Because this one is very interesting, right, to manage the portfolio.
Yeah. That's why this is only the step in the middle. So once the clustering gives the result, which stock that falls into each cluster, I suggest that you put it in another process, like more screening or more checking before you decide which stocks that you want to buy. But in my example, I blindly put all the stock content in one cluster. So buy all the stock in cluster one, and then let's see what happens if I do it 20 days ago. But in reality, yeah, you have to check. You have to do more checking before you buy.
So it's a hybrid, combining manual and automatic.
Yeah. I prefer hybrid. I suggest it's hybrid because black box algorithm running as good as black box. I mean, that's the scariest thing.
Thank you, answer.
Thank you.
I guess we wouldn't want it to come to that, Pak Indra and black box. And otherwise, will not have human technical analysts anymore. It would be redundant.
Yeah, I still believe manual is much better than automatic.
I mean, hybrid.
Yeah, because automatic can be manipulated by numbers.
Agree.
Oh, we're doing good in time, actually. It's just 12:02. So we're ahead about 15 minutes. But nonetheless, we'll call for the next speaker to come forward. I'll give a bit of...
Maybe you can invite Dandy to Malaysia next time, like last time you invite me.
Yes, okay. We'll you there?